All right, I'm here with Bernard at BGI Financial. We're today talking about how your debt servicing, as in car payments, is affecting your ability to buy a house. Why don't you tell us a little bit about what we can do to prevent our car payments from making us unable to purchase?
Well, first of all, when you get pre-approved, your financing person will give you the number that you can buy based on where you're at. So tip number one is do not take on any more debt, car payments, or revolving lines of credit or credit cards while you're in the middle of trying to buy your house, because then that'll change your numbers. And then once you're in the middle of writing an offer, you could blow out your numbers and it won't work anymore. So I'll give you a couple of examples here. If you have a $500 a month car payment, and let's say you're putting less than 20% down, let's say you put 5% down, that car payment is basically eating up $67,000 of buying power. So therefore, if you didn't have that car, you could buy a house for $67,000 more.
That's a huge difference. So if you were to get pre-approved and then go and finance a vehicle, you're all of a sudden just chopping down.
Just drop down by 67 grand and it can blow your numbers out. Totally.
Yeah, you might have an eye on a particular house and then be unable to get it. So yeah, definitely don't do that.
So yeah, because basically the way it works is they add up all of your expenses and then they divide that by your total income, and then you multiply that by 100 to turn it into a percentage. And so I can only use 39% of your income to go towards the house. And then I can only use 44% of your income to go towards your house and your car and whatever other debts you have.
Right.
If your credit score is below 680, those ratios get cut down to 35% on the house and only 42% on your house and the entire rest of your situation, right?
Wow. So it has a massive effect, essentially, is what you're saying.
Yeah, it's a balance between your credit score, and if it's good, you get the 3944. If it's not as good, you get the 3542.
Right.
And then the other balance is your income versus your expenses. So maybe I'll give you another example. Let's say that you've been working hard and you saved up a 20% down payment, because now it changes slightly. So if you have a $500 a month car payment, that eats up $81,000 of buying power on your future purchase.
Wow,
so
that's huge. Absolutely huge.
Like in addition to, like you might just say, oh yeah, car payments, but let's say you're housing a line of credit, you hold a balance on there. What the bank will do is they'll say, oh, that's great that you're only making the interest payments. We don't care about that. We're gonna take 3% of the balance, and that's the payment you're gonna make. So if you have a $10,000 line of credit outstanding, that is going to be a $300 a month payment, even though you might only be paying $50 a month interest-only payments on it.
Right.
So, yeah, I can do that really quickly for you too. If you have a $10,000 line of credit balance, regardless of what your payment is, the bank will put in a $300 a month payment.
Interesting.
And with 5% down, that eats up $40,000 of buying power. That 10 grand line of credit eats up 40 grand of buying power. And then let's say that you did have 20% down. That 10 grand line of credit eats up $48,000 of buying power. So it just makes a huge difference, and it's good to be cognizant of your car payments and your lines of credit and credit card debts.
Right. So if you're thinking, you're in the market of buying a new place, you got to be really, really conscious of getting into further debt, or really maybe focus on getting out of existing payments, whether they be credit cards or lines of credit, and then just be conscious of the new vehicle thing. It seems to be getting a few people lately. So, maybe the dealerships are having good deals out there. I don't know. But
that's right. But it'll blow you out at the end, and you'll blow out your numbers and you'll lose your house.
All right.
And yeah, just one final note I'll make is we actually analyze your situation, and we look at which debts are the most effective for us to pay off first to get you the maximum amount of borrowing power. So we'll analyze that and then prioritize what should you get rid of first, and then that'll maximize your potential buying power. So just reach out to us if you have any questions. Kevin and I would be happy to help you.
Yeah, we'll put a link below, so definitely check that out. It's a great way to get started on your financing journey. Again, I'm Kevin Wood with eXp Realty in Kamloops.
And I'm Bernard Emmel with BGI Financial.
All right, we'll talk to you soon.